Hi, everyone. Hopefully, you're having a wonderful day. Yesterday, I had an opportunity to work with a client, and we went through some of the credit cards, loans in general. So I wanted to also look at what I have in terms of my interest payments for July since starting Velocity Banking back in January of 2024. As you can see from the board, these are all my debts that I have currently listed. Initially, I think I started with 22 different accounts, and now I'm down to, I think, 16 or 17 accounts in general. So these are all of the payments in terms of just interest, not going to the principal, but I went through all my bills to see how much I paid on each one of the cards in terms of in terms of the loans or the cards. Now, there are a number of different types of interest. What I'm gonna just talk about right now is just give you a quick example of three that I came across. Simple interest is kind of like interest that's calculated on a daily basis. For many of you, I just secured a HELOC. That HELOC of $50,000 is calculated on a daily basis at 10.25%. So whatever principal balance that I have, multiply that by 10, then divide that by 366 days of this year, and you'll get what I'm have as a daily rate. So for this HELOC, the daily rate or the simple interest every day that I'm paying is about $14.14 every day. Amortized interest, an example of that would be a mortgage. Currently, I have two mortgages. I had three. The interest is calculated on a monthly basis. When I first got the mortgages, it was already had an amortized schedule of my regular payments that was composed of a principal part and an interest part. So that's one example of amortized. Compounding interest, your credit cards. So all of my credit cards, whatever balance I have is multiplied by the interest, and that's added for the month, and then is provided to me as to how much I would need to pay. Also, with the compounding interest, whatever interest or balance that I do not pay for that month is added to the next month. So for this month, it was $43.95 in July. If I make the minimum payments or in general, it'll capture that and pay it. But if I really let that carry over to each month, I'm paying interest on top of interest on top of what I'm consuming. That's compounding, or an example. So back to all of the interest payments that I paid for the month, total $1,076.24. Now, one of the unique things is that my student loan is my largest debt, and currently I'm in a repayment plan. And whatever payment I'm paying now, I'm only really paying a small portion of the interest. My payment regularly is about, I think, $1,000 a month. So right now, because I'm just in a plan and working through these items, I'm not paying as much. So the interest is also compounding on the student loan debt. So back to just everything I paid, interest for the month, $1,076.24. And I pared that down from earlier, like I said, about 22 accounts across the different companies or bureaus in general. So if this was just 1 month, and I'm just going to say the average is this for one full year, although I've been paying down the debt, I'm just going to do some simple math and just say, okay, for the full year, you're paying about $1,076.24 a month. So I'll let you go ahead and calculate that and see what you come up with. Okay. So if my math serves me right, 1,076.24 times 12. In 1 year, I would have paid 12,914.88 in interest across these three different types of interest. Multiply that by the last 10 years. So I paid maybe, let's see, 10, 76, 24, and it was higher than that. So this is just being conservative. 12 times 10, $129,148.80. So just wanted to come and then look at what I am paying myself personally. These are just, again, just what I'm paying on in interest, not anything toward the principal. So on a monthly basis, I'm spending about $1,076.24 in interest and about $12,914.88 in interest. Looking at the three types of interest that are in all the loans and all the debts that I have. A simple interest is the HELOC at 424 is calculated daily, or someone may give you a personal loan of say 500 and say, hey, you have to pay me 10% back of the loan. That's simple interest. It's not compounding. They just give you a number. Amortized interest, again, the mortgages. I have two mortgages left. Had a total of three. Was able to pay off one 30-year mortgage in 2 months. That's amortized. Compounding interest. All of the credit cards that I have, as long as I'm carrying them, making maybe the basic, then the interest is compounding each and every day. So maybe I'm going to make a goal for 2025 to reduce this yearly interest just of my salary. Let's go back and also do some more math. 9811. So my monthly take home 3390 times 12, that's 4680. So annually 40,680 is my net. And if interest payments of that 12,914.88, that's 27,765.12. Okay, so of my net of servicing my debt, servicing my lifestyle through the various interest payments, net is about 27,665. Okay, all right. So yeah, run your numbers and see what you're paying in just the interest for the month, then do the year, subtract it from your net that you're bringing home, and kind of see what you're operating off of. And leave a comment. Let me know if you like the video. Please hit the like button or the subscribe button, particularly the like button if you stop by, so it can move up a little bit higher on the algorithm and more people can see it. All right. Again, I am not a CPA. I'm not an attorney or a counselor. Just showing you the things that I'm doing in terms of reducing my debt and using velocity banking and accelerated banking to do that. All right. Thank you very much. Have a great day. Let's take a minute, just look at the numbers. Okay, everyone, have a great day. See you in the next video. Bye-bye.